Hi guys, and welcome back to Tesla Electron. Keith here. Hope you've had a fantastic week. It's been very exciting. We've had a big week in the world of Tesla. Of course, they did their Q1 earnings report on Wednesday, and so I'm going to go through that a little bit today, and we'll have a look over the next few days. We'll play out bits and pieces about what Elon said and some of the others about what Tesla is doing. So sit back, grab yourself a cup of tea and a coffee or whatever, and something to eat, and we'll go through this thing with them together. All right, let's get right into it right now. Okay, as we can see, the people that were going to be at the meeting is Martin Viecha. He's the VP IR. We've got Elon Musk, the CEO. We've got Zachary or Zach Kirkhorn, CFO. Andrew Baglino, he's the SVP Powertrain and Energy Engineering. And we also Morave, he's the VP Vehicle Engineering. What I've done here is I've got the whole transcript, so hopefully you can read along, and hopefully I can set it up so that you'll be able to read along with what they're saying. I don't know about you, but I found some of the communication difficult to hear and definitely difficult to understand. So I found the transcript really helpful. So let's go through that as well. Let's get into it right now.
Good afternoon, everyone, and welcome to Tesla's first quarter 2022 Q&A webcast. My name is Martin Viecha, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q1 results were announced at about 3 p.m. Central Time in the update that we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events and results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Zach will have some opening remarks. Zach?
Yeah, thanks, Martin. Just to start off here, Q1 was a challenging but extremely successful quarter for the company. Despite numerous supply interruptions, including shutdowns at our Shanghai factory and nearby suppliers due to COVID, we've continued making progress and achieved our best ever vehicle deliveries. Last quarter, we demonstrated a series of new financial records, including revenue, gross margins, operating margin, and bottom line profitability. GAAP automotive gross margin reached 32.9%, and for the first time exceeded 30% when excluding regulatory credits. Higher pricing continues to positively impact our financials as we make progress delivering cars in our growing backlog. Note that for most vehicles, our delivery wait times are quite long, thus cars delivered in Q1 generally carried pricing set in prior quarters and at levels lower than cars being ordered today. Our per unit vehicle costs increased as well. Inflation, raw material prices, expedites, and logistics costs continues to impact our cost structure. Factory shutdowns also occurred with little to no notice, hence we are unable to take action to plan those interruptions in a cost-efficient manner. Additionally, we saw a slight mix shift towards more profitable vehicles, including the Model Y. We also recognized a one-time benefit of $288 million from credit revenue relating to a regulatory change in the U.S. CAFE penalty, without of which credit revenue would have declined compared to the same period last year. The energy business has continued to be impacted by macro conditions more severely than the vehicle business. Our storage products are in need of chip supply, and new import processes have impacted supply of certain components for our solar systems, which is reflected in our solar volume for the quarter. OPEX as a percentage of revenue continues to reduce, driven by higher revenue, lower stock-based comp expense, and other items. As a result of our ongoing improvements in operating leverage, we achieved a record operating margin of over 19%. Note that commissioning costs for our factories are in R&D, as Berlin started production in late March and Austin in early April. These costs will be in automotive COGS going forward, given these factories are now producing customer sellable cars. Our free cash flows have remained quite strong, yet were impacted by working capital related to lower than planned production. Additionally, we have reduced our debt, excluding product financing, to nearly zero. Looking ahead in the immediate term, a few things to keep in mind for Q2. First, we've lost about a month of build volume out of our factory in Shanghai due to COVID-related shutdowns. Production is resuming at limited levels, and we're working to get back to full production as quickly as possible. This will impact total build and delivery volume in Q2. Second, as I've mentioned before, Austin and Berlin are just starting their ramps, and thus those inefficiencies will start to flow through our gross margins in Q2. Third, we do have higher ASPs in our backlog, which will help to offset some of these headwinds. We continue to drive towards further strengthening of our financials in the second half of the year and believe our 50% or above growth rate remains achievable for the year. I want to conclude by thanking the Tesla team, our suppliers, and our new customers for a great first quarter.
Thank you very much. And Elon has some opening remarks as well.
Sure. Some of my remarks will be redundant with Zach's, but it's maybe worth repeating. Q1 was once again a record quarter on many levels, reaching the highest deliveries, profit, and an operating margin of 19%. This was despite a lot of chip shortages, many logistics challenges, and an overall difficult quarter. So I'd really like to congratulate the Tesla team on achieving record profitability and output despite many difficult headwinds, and especially the Tesla China team in our Shanghai factory. They really had significant challenges due to the COVID shutdowns, and nonetheless have been able to output a tremendous number of high quality vehicles. And we are already back up and running with the Shanghai factory. So as Zach said, we remain confident of a 50% growth in vehicle production in 2022 versus 21. I think we actually have a reasonable shot at a 60% increase over last year. So let's see. Obviously, we began production, as people know, with Giga Berlin and Giga Texas in the past few months. So we have two fantastic factories with great teams, and they are ramping rapidly. Now, with new factories, the initial ramp always looks small, but it grows exponentially. So, but I have very high confidence in the teams at both factories, and we expect to ramp those initially slowly, but like I said, growing exponentially, with them achieving high volume by the end of this year. So let's see. We're also working on a new vehicle that I alluded to at the Giga Texas opening, which is a dedicated RoboTaxi that's highly optimized for autonomy, meaning it would not have steering wheel or pedals. And there are a number of other innovations around it that I think are quite exciting, but it's fundamentally optimized for it's trying to achieve the lowest fully considered cost per mile or cost per kilometer, counting everything. And so it's, I think, going to be a very powerful product where we aspire to reach volume production of that in 2024. So I think that really will be a massive driver of Tesla's growth. And we remain on track to reach volume production of the Cybertruck next year. Let's see. So it's basically, once again, I'd like to thank the Tesla employees for their hard work, but also I'd like to thank our suppliers who have really gone the extra mile. we have an amazing supplier group, and I just want to say heartfelt thanks to the suppliers that have really worked day and night to ensure that Tesla is able to keep the factories running. And we're really at the early stage of our journey. We only crossed 1 million units in the past 12 months recently, and we aspire to head to 20 million units a year. So we're basically 5% along the way towards our goal. And but we are growing, very, very rapidly year over year, and remain confident of exceeding 50% annual growth for the foreseeable future, for basically several of the next years. I mean, so yeah. And then there's, of course, Optimus, which I was surprised that people did not realize the magnitude of the Optimus robot program. The importance of Optimus will become apparent in the coming years. Those who are insightful or listen carefully will understand that Optimus will be worth more than the car business. That's my firm belief. Worth more than FSD. So that's my firm belief. And then, of course, insurance is growing well. We expect to address the part shortages that limited our progress with batteries and solar. So we expect batteries and solar to also grow well this year. And basically, the future is very exciting. I've never been more optimistic or excited about the Tesla's future than I am right now. Thank you.
But I hope you really enjoyed that. I hope that the text really helped you to understand what was being said. I know myself, I listened to it a few times and then found that I missed a lot. Being able to read through the transcript was really helpful. So I hope that really helped you out a lot. Hope you really enjoyed the video. Until next time, stay charged, and I'll see you again very, very soon. Bye.